I was dead wrong about the job report. And that is a very good thing. Coming up on The Job. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It is 9:05 here in the middle part of the country on Friday. Happy Friday to you. It is February 3rd, 2023. Here's your morning jog around the economic headlines of the world. I want to start off with the jobs report from the Bureau of Labor and Statistics, and this month is a killer. 517,000 additional jobs added in January. Unemployment down to 3.4%. Even the labor force participation rate that so many economists have maligned for years as more folks are now entering the workforce because the job market is so good. Now, off the top, I told you I was wrong about this report, and I will stand by that. Listen, last month's report was sort of overachieving. Now, this month's report is overachieving. We saw a little bit earlier on in the week, ADP, the private version of this report, came in a little bit lower than expected. Folks, the jobs economy continues to be extremely strong. And folks in the market don't like it. They say, oh, we're going to continue raising rates. The Federal Reserve will keep bashing the economy over the head with interest rates until folks to stop consuming. Listen, if more folks are entering the workforce, the economy as a whole will be more productive. And guess what? That helps us avoid a recession. I know that lots of folks on Wall Street like to say things like, we need a recession. Or, hey, there are too many jobs. Listen, this economy is robust. The data is what it is. And if you are not looking at it, you're going to be misled by the Wall Street hype train, which tells you things are terrible. We're going into a deep, dark recession. We may have some headwinds. Inflation continues to be a little bit sticky. Interest rates will follow. But folks, things are really good on Main Street. And let's not look that gift horse in the mouth. Let's talk about Alphabet missing earnings by a little bit here this morning. Not too bad. YouTube revenue, a little bit below expectations. Listen, they're still a profitable cash cow. They've laid off a considerable number of folks to help restructure some of their businesses. On a go-forward basis, this still looks like a very healthy company. And if you're betting against big tech just because it's been overbought over the last couple of years, now you're thinking it's oversold, give it 2 quarters, give it 3 quarters, give it 4 quarters, and suddenly those growth rates, which, to be fair, Alphabet's was just 1% this quarter, those growth rates will eventually make those multiples attractive and those stocks to be value names. Again, last but not least, it's going to be cold this weekend in New York, New England, and the like. Please bundle up if you're in that area of the country. And let's talk about what it means for energy. Energy is going to be used a little bit more here in February. Think natural gas, think heating oil. It has been the rest of the year. That may cause a stemming of the recent decline in energy prices we've seen. Just something to keep an eye on. If you want some additional info throughout the weekend, feel free to find me on the internet. I'm out there. Till then, you and your family have a wonderful weekend. I'm out.